Hello?
Nitin sir, you are on mute, I guess.
Hello, Nitin. I don't think so. Am I audible?
Sir, you are audible. I guess Nitin sir has muted himself. Should I call? Give him a call.
No, I don't think so. He can hear me.
Okay.
Oh, he's from two things.
Yeah, yeah, yeah.
Yeah, so I'm having a problem with my mic in the laptop. So I thought
Oh,
I'll, kind of log in from because the presentation is on the laptop. So, so
okay, okay.
anyways, yeah, that's what I was struggling with. Anyway, so yes, ma'am. So I can see you now and hear you now as well.
Actually, the thing is, you will have to mute either of the laptops because otherwise it will create an echo.
No,
No one will be able to hear.
one laptop is absolutely mute because
Okay.
yeah. So there is no echo right now, right?
Yeah, yeah.
Then because somehow that function is not working, the saying that it can't access the mic in the laptop. So I don't
Hmm.
know what exactly is it. Yeah.
Okay.
Yes. Yeah.
I guess I'm going to mute myself. You can start, ma'am. Whatever it is.
Okay. So I'll just give an
Yeah.
introductory this thing. Okay. Good evening, everyone. So, on behalf of Rajashri Shah College of Engineering, I warmly welcome one and all for today's webinar on raising capital and managing finance for startups. We are honored to have with us Mr. Gumaste, a seasoned corporate finance professional with over 17 years of experience in investment and corporate banking. Sir is a CFA and has successfully advised corporates on mergers, acquisitions, capital markets, and strategic funding. As a founder partner of ProValue Financial Advisory LLP, and with prior leadership roles at SBI Capital Markets, ICICI Bank, he has led landmark deals across diverse industries. So we look forward, sir, to hear from you.
Yes, ma'am. Thanks a lot, Deepali ma'am and Dr. Deepali and Dr. Sachin for giving me this opportunity. So actually, I'm not a seasoned academician, so not really used to giving presentations online, but I'll try my best.
Yes.
So, so just to get into this topic, raising capital and managing finance. Actually, this two are different subjects. We have clubbed it together, which is fair enough. Both things are kind of interlinked, but still pretty much separate than each other because there can be businesses where there is no capital raising required as such, but managing finance is always there. And we see a lot of businesses where there is only capital raising and hardly any finances managed. So those eventually end up failing. So, anyways, uh, so yes, yeah. So we can look at it as like this. So basically, raising capital is the process by which the startup founder becomes instantly rich. and managing finance is the process through which the founder remains rich for some time. So it's quite easy to, I mean, it's quite possible that. So I have seen founders which have raised a couple of crores, who got a nice house, who got a car, and then over the next 2 years, they have told their investor that the money is over now. So Tata bye bye, the money is gone. And we don't have any laws in India per se which kind of protect the investor to that extent. So that is one reason why raising capital is difficult in India, which protect the investor to that extent, and that's why sometimes, and that's the reason why raising capital in India is slightly difficult. But managing finances, basically, once you have raised the capital, or even if you have not raised it, but you have built a business on its own, managing finances, what will help you run the show for longer. So that's how you can differentiate these two uh, from each other. So let's get into raising capital first. So India now has about 119 unicorns. So on the next slide, I've mentioned what's an unicorn. Unicorn is basically a company which has a valuation of over $1 billion. So $1 billion is almost about 9,000 crores in the Indian context now, and that's a big number by all means. I mean, you look at India as a country, and we have 119 in that. So in fact, in 2024, five of them got added to that unicorn club. We know quite a few because we use them regularly, like be the Zomatos or the Flipkarts or Ola or kind of Zepto, Blinkit. But there are quite a few and very interesting companies like Perfios, which got into this unicorn club last year. They have built a fantastic financial analysis tool which is used practically by more or less every Indian bank now. I mean, you won't find a bank working without Perfumes now. Similarly, you have this company called Infra.Market, which is identified a pain area in the infrastructure space, and they were the first ones to identify that the biggest problem with infra is basically those who build roads and bridges and dams. So the biggest problem which these companies face is the theft of raw material at their site. So Infra Markets was one of the first which identified that particular opportunity, and they have built a fantastic company which is a mixture of e-commerce as well as process management as well as data management for these infra companies. So we have some wonderful companies in this, and the number is increasing with every year passing by. So when you talk about unicorns, obviously unicorns come at a later stage. The first stage when anybody starts a startup and wants any help, it is basically an incubator. So there are quite a few incubators. There are incubators which are focused on sectors. We have few incubators in Pune also. So as a startup, you can get registered into an incubator. So there you get into a community of startups. You meet a few people. You can network better. Those incubators can help you on guidance related to starting the company, getting your legal aspects right, getting your taxation aspects right. So there is a bit of support available there, and you can speak with like-minded people there. So that's what incubators do. Rarely they infuse money into a company, but there are a few incubators who run their own VC funds. So those VCs they do invest. Then comes the Unicorns. Unicorns are the companies which are about to become unicorns. So these guys have valuations between 4,500 to 9,000 odd crores in today's context. So Ninja Cart is one company which is about to become a unicorn. Cars 24 or Zupi are the ones which are in that line. Zepto and Porter were unicorns last year. They are unicorns this year. Then comes Unicorn, as we discussed about. Then comes Decacorn, which is actually 90,000 crores and above, where you have these Flipkarts and the Olas of the world. And then comes Hectagon, where actually you have the BAs, the Apples, the Microsofts, the Googles, and all those. So how does the Indian context look like in 2024? Basically, about 13 billion dollars have been raised in 2024. That's been a good year for startups. The number of startups which have raised capital are about 1,200, and uh, it's still a small number by all means, but better than last year. So why do I say it's still a small number? Because about 5,300 startups came up last year. That's where we have been mostly. So in a pool of say 25, 30,000 startups, only 1,200 have been able to raise capital in any form. Right? So 95% of the deals are less than $50 million. It's naturally because $50 million is a big number in Indian context. The median check is about $3 million. So the median number comes to about 20 crores of capital raised by these companies. You mentioned about the unicorns. The top sector last year was consumer technology. You have these the Zeptos and the Blinkits, kind of those kind of companies which come into this. So basically, which the technology which caters to the end consumer directly. The other sectors which have been in flavor last year were fintech, SaaS and softwares, health tech, deep tech, clean tech. So most of the companies which have raised money last year have a tech angle to it in some of the other form. Of course, AI and ML and those things are catching up very fast. Unless your startup is has some angle of that in making, you don't get funding that easily in India at this point of time. I mean, gone are the days where only Indian market to be catered was the story. You need a strong tech base now. And we also have about 5,000 startups which were shut down last year. And these startups were so they were equivalent to the number of startups which came up. So actually, startups is nothing but businesses which start, kind of, and that has been happening for ages together. And people have been starting businesses, and it says that the moment you convert or so mostly businesses they start as a proprietorship first. If you have a partner, they start as a partnership. Then comes a stage where the constitution becomes a private limited company or a limited liability partnership, LLP as we call it. So the moment you register yourself as a LLP or a private limited company, you are termed as a startup. Otherwise, it's just any business that you start working upon. So basically, why do startups need capital? So obvious reason is there are a lot of expenses in the early stage and there is no revenue. Money is required to develop the product or the service which you have, because you might have an idea in your mind, but that needs to be converted into a real prototype. It could be a product or a service, whatever it is, and money is needed for that. You need to get good employees, because unless a good team is built, no startup can really scale up. You need money for marketing and customer acquisition. That's one very important part, because unless you have customers, nothing really works out. Uh, then you need money to set up infra. It can be as simple as buying a laptop for your team, or it can be as expensive as getting a broadband line, lease line for your team if you are in the tech space. Then you need money for daily operations. So this is typical in case of manufacturing companies, where you need to get your raw material, you process it, you sell it. So that's where you need money for. And then you of course need money for scaling and expansion of your business. So these are the broader categories where money is needed, and these are the broader categories for which a VC or a investor or a debt lender might lend you. Anything outside this, so for example, you get into a litigation and you need money to fight that litigation, nobody is going to give you the money. You have to put it from your own pockets. So these the areas identified here are probably the ones which will get you into or help you build a pitch deck for raising capital. Now, what are the types of fundings which you typically see? I mean, we do hear a lot about VC funding and so on and so forth. There are interchangeable terminologies, but the first and the foremost is bootstrapping. So basically, it's nothing but you starting your business on your own with the money which you have saved from your job, or with money which you have taken from your parents and family. So basically, bootstrapping is you start your business the conventional way and build it the way it should be built, in, with an aim to building a sustainable business. So the biggest bootstrapping examples today in India are, say, Zerodha, which most of you must be already using, or there is a platform called Zoho. These companies have built their entities